happening? What's happening? What's happening? Ah. What's going on? What's going on, family? What up, 100, 100 up in here early? 100 up in here. What up, Red? What's up, here to learn and share? What's happening, man? Are you ready? Is you ready? You say you ready? The whole squad ready. Y'all ready for power tomorrow, man? Y'all ready for power tomorrow? Let's get right into it, man. Y'all know who I am, man. I'm Timothy Lee Rogers Sr. For the folk. Oh, let me pin my comment. Let me pin my comment on here. Y'all already know what to do. Go to YouTube. I'm pinning, for those on the replay, I'm pinning a comment on Instagram so that Instagram fam knows to go to YouTube. How y'all doing today, man? What's going on? How y'all doing today? How was your day today? I miss you hey, Charles said he calling Law and Order on Powell. Hey, Charles, pull up on YouTube. Charles, pull up on YouTube. Hey, what's going on, man? How everybody doing? Janisha, good to see ya. What's up? What's up, Tasha, Tap Skim? You know what I'm saying? What's up, Brittany? What's going on, everybody? What's up, man? Hey, we gonna get right into it, man. Y'all know who I am. My name Timothy Lee Rogers Sr. Y'all jump on here every day at 6:30 p.m. Eastern Time, and we do the price action recap with the Spider Gang. You feel me? You know what I'm saying? We try to go live in the morning time on IG / the new TLR, and try to talk about the overnight price action. That's when I ain't running late, or when I got something to say. I always got something to say. I would never ever charge anybody for getting on the internet and sharing my knowledge / experience / journey when it comes to the stock market and or trading and investing. If you want to support me, you can go buy you a fancy dance shirt like this right here. It say, I'm not a bull or a bell, I'm a beast. Hashtag Spider Gang. Well, Tim, how can I get that shirt? I'm glad you asked that question, little Tim Rogers. When I share my screen, you'll see how you can get that shirt. If you go to www.thenewtli.com, you can get you a shirt just like this. You get one that say discipline over dollars. You get one that say I got options. You get one that say trade what you see. You get a hoodie. You get a cell phone case. You can get whatever you want. Just go on there. If you want to support your boy, go shop at the shop and buy you some merch. I'm not a bull or a bear. I'm a beast. I like this one here. I like discipline over dollars. I got options was the first one. That was the staple. I ain't even gonna tell y'all how. I'm gonna show y'all my shirt that I got that can't nobody get. Right? I'm gonna show it before we even get into this right here. Before we get to all the other stuff, I just want to show y'all my shirt that I got. Matter of fact, I just ordered it last night. And it'll be here. It should be here pretty soon. Right? Let me grab this right here and pull it over here so y'all can see it. Ba-ba-da-da-da-da. That's the shirt that I got last night. Ba-ba-da-da-da-da. It should be coming here soon. That's only exclusive for me, though. Can't nobody else get that shirt. Well, Tim, why not? Because I said so. Hey, speaking of get that shirt, y'all go support my daughter, Alexandria Cartwright, a.k.a. Learn with Lex, a.k.a. Trader Lex, a.k.a. Liquidity Lex, a.k.a. Spiral Out of Control and Blow My Account Lex. Go to shopwealthwalks.com and support Lex, man. She a young woman doing a thing, got a small business. She a small business owner, and it's hard out here in these cybersecurity streets, man. Y'all go support Lex, man. Go support Draco. Big Draco in the building. You know what I'm saying? She got her master's in criminal justice. I seen that highlighted right there. Just caught my attention. But she been doing this for over 20 years. Dealing with finance and insurance industry over 20 years. She can hook you up. Go to prolificprophecy.com. Ain't none of this sponsored. These just my folk, man. This my family. You hear me? She can help you with budgeting stuff, estate planning, all insurance. Speaking of insurance, shout out Shanisha changing lives. I've been forgetting to shout Shanshi out, man. Y'all go support Shanshi. I'm gonna go to her IG too. Shout out to A Squad. They got a merch shop. They go live every Friday on Zoom. and they be trading live. If y'all go to A Squad Live on Instagram, go to Boy Instagram, go to JD Instagram, go to Vic Instagram, go to Doc Instagram, go to all their Instagram. They be trading live on Fridays, man. Y'all holler at A Squad Live. They got a merch shop right here. I ain't got no link for the A Squad Live. Who we got on Instagram? Oh, we still got Stock Baby up. Shout out Stock Baby. Stock Baby got the Freedomville, man. Freedomville Discord. Stock Baby giving away the one-on-one. Look at that. I just seen that. Stock Baby, why you blew the buggy up, man? What the buggy do to you? Stock Baby blew the buggy up, man. Stock Baby said he giving away a what's the name? I just seen that when I popped on his page. But anyway, y'all go check that out. See what you gotta do to win that mentorship. And if you click on that, it'll take you in there to join Freedomville. It's asking me to follow the link. I follow the link. I truck Stock Baby. Boom. You go to Freedomville, and if you want to be part of his Freedomville Discord. I was coming there to shout out my homie Stock Zay. Speaking of Stock Zay, me and Stock Zay been having some real good conversations about this market, man. Shout out Stock Zay. If y'all not following Stock Zay, y'all need to follow Stock Zay on Instagram. This man be dropping some gems on here. You know what I'm saying? You can click on his Linktree link. You know what I'm saying? Why is asking me to do this all the time now? He got the runners. It's a community that he run. You can join that, be a part of that. He got First Gen Wealth on YouTube. You can schedule a one-on-one with him. That's Stock Zay. This light-skinned dude right here. Right here. That's him right there. That light-skinned dude right there. That's Stock Zay. Me and Stock Zay been having a whole lot of interesting conversations. Come on, man. I clicked on it. Bully Frenchies. If y'all into dogs, go to bullet_Frenchies, bullet_franchise. The homie 100 can get you any kind of dog you want. These his dogs here. Jasper, look at Jasper. Jasper looking mean. Jasper, that's Fat Boy over there, aka Rock Lee. If you into dogs, go to bullet_Frenchies. He get you any kind of dog you want to get. Scott's Creations. This man right here is a culinary genius. Culinary genius. You feel me? You see these menus right here? Let's click on this menu. What this menu is? It says barbecue BB. It's baked barbecue wings with celery, carrot sticks, and blue cheese dip. With a loaded baked potato and shrimp. Man, this man is a culinary. These menus. He give you menus to go through, and you be like, well, Tim, I don't know how to cook none of that. He tell you how to cook it. He give you the recipes and all. Tell you how to cook it. Show you how to put it together with the videos. You click on his Linktree link. It takes you to the store, and you can buy his own seasonings that he made. And peep this right here. You see what his season say? You can put it on darn near everything. That's the name of that season. And that right there, that's GG's. That's GG Seafood. He got all, man, he got these different seasons, man. Shop with my boy. And see right there, it say recipients. Them recipients. Look at the ginger tea. He got all, man. Go shop with your boy, man. Shop with your boy, the real Travis Scott, on Scott's Creations on IG. Who else I'm gonna shout out on IG? Charles Coney. Can't forget Uncle Charles. We need to get into it, man. Charles Coney, go on his page, Uncle Charles. He been investing since Moses was still in Pharaoh's house. That's how long he been investing. Go book a one-on-one with this man if you want to get your portfolio together, man. Anybody that I forgot, charge to my head, not my heart. I ain't mean to forget you. I jollipize if I did forget you. Let me close some of these tabs up here, man. Let's get into this market. How did y'all feel about the market today? How did y'all feel about the market today? I'm trying to close these tabs, man. I got 100 tabs open over here. All right, man. How did y'all feel about the market today? I ain't gonna hold you. I was waiting for this right here to come a little bit lower into this 15-minute fair value gap, and I was gonna swing me an MES contract again over the break to ride it up. Just like how I was trying to get in yesterday and wasn't able to, I was gonna do it again and ride it up. The day price action today, man. I'm gonna get into the stuff that me and Zay was talking about. I mean, I keep saying that and I keep forgetting. I ain't even put in my clothesline. I'll do all that later. I ain't gonna hold y'all up on this right here. So the price action for overnight, you know what I'm saying? They were the midnight open. The Asian, y'all see what the Asian did at the midnight. Asian slowly came. This was yesterday closed. Asian inched up. These 15-minute candles, by the way, right? Inched up. Once we got up here, took off. Ping out. You know what I'm saying? Went up there, got up here. This the buy side. It set. it was not able to, like, I had another buy side line up here that I done deleted already. I had a buy side line here from yesterday that it didn't get to, right? When we opened, and then it started coming back down right before 8:30, like during the London, it came all the way down right before 8:30. Then while we was on live together, you know what I'm saying, I marked out this liquidity line and this liquidity line here while we was on live. If y'all remember, go back and watch the video, right? I was hesitant about marking these lines. I was like, yeah, I go ahead and mark them because I ain't have a real warm and fuzzy about us going back up there today. You know what I'm saying? I ain't have no real warm and fuzzy about us going back up there today. As far as how we was trading overnight, it was hinting like it might have wanted to try to go up there. That's why I was like, as of now, the way it's trading, the bias was to the upside. But if y'all remember, I really ain't want to mark these highs right up here because I did this high and this high because I ain't had no warm and fuzzy about us going back up there, right? So all I was concentrating on today the most was this liquidity to the downside because that's really where I thought we was going. You know what I'm saying? I really thought we was going down there, and I was hopeful that we would hit it and, you know what I'm saying, at least bounce back up. But nah. Your boy Powell said no. Your homeboy right here, where he at? Where Powell at? Powell said, not today. Powell said, not today. You know what I'm saying? Powell said, allow me to reintroduce myself. My name is Powell. Yes, sir, man. Powell said, not today. You feel me? He said, that ain't gonna happen today, man. And then, so we kind of dilly-dally around. Oh, yeah. Drum roll, please. I decided today that I'm gonna step back into day trade and futures. I'm stepping back into day trade and futures more regularly. You know what I'm saying? I ain't saying I'm gonna take a trade every day, but I ain't gonna not take a trade if the setup come. I'm stepping back into day trade and futures. I'm gonna start out with the MES, take it real slow and steady, but I'm gonna get back into day trade and futures because I be looking at it every day. You know what I'm saying? To be frank with you, I'm just getting tired of seeing these moves and calling these moves to myself and not taking them. You know what I'm saying? But the moves I called to myself today, I actually tried to take one today. And it didn't come get me. But the move I called to myself today was right around here when we was dilly-dally. Well, in the morning time, we was just chop city, right? We shot up after the news, right? Then when we opened up, we shot up and we stopped right there. And then we shot down and took the buy side right here. Boom. I mean the sell side. As soon as we took the sell side right here, in my mind, I was thinking, if we come back to 12 o'clock, I'm going short. You know what I'm saying? Like if we come back to 12 o'clock, I'm going short, right? That was in my mind. I ain't say that on the live, but I was thinking that in my head, right? So over here, you see we start pushing up, going toward it, right? I ain't gonna hold you. I stepped away. I went to go do something real quick. And when I came back, we had already hit 12 o'clock and dropped below it. Yeah, I probably could have, you know what I'm saying? I probably could have jumped in and did something, but we hadn't dropped below it, right? I was a little upset, but no harm, no foul, because guess what? It didn't give me my entry anyway. If we drop down a little bit lower, it ain't give me my entry until over here. This when it gave me my entry over here on the 135, the 125 candle. Yep. And the 125 candle, I was not in here. I was not in here. And let me show you why I say it ain't giving me my entry, right? Because here we go. Right here. Boom, boom, boom. We went up and we hit it. We went above, right? When I came back, if you look right here, we got a fair value gap right there on the 5 minute, right? Y'all already know I like to watch the 15 minute, like to watch the 5 minute. I like to mark my fair value gaps on the 60 or the 15 minute and then go down to like the 5 minute to see if it's some inside there. But if you notice, we never came back to my fair value gap right here until this candle over here. But I wasn't in here. So that's why I wasn't super mad about it, because I stepped away. I felt like I missed it, but once I really looked into it, my trade really didn't set up until over here. After I get off, it was like at 1:32, and I don't really come back here, you know what I'm saying, that late. I mean, that time of the day, right? But when I was really trying to get into the position and it left me, y'all, what is that? Y'all, hold on one second. Okay. All right. All right. Yeah. So when I was really trying to get into the position and it left me, it was what is this thing doing? When I was really trying to get into position, when it left me, it hadn't came down, and I was trying to take it. I was trying to take it back up, like to this area right here, right to this fair value gap right here. It came. I even text Lex. I was like, Lex, it left me. And then Lex was like, the entry was on the 3-minute. The entry was on the 3-minute calendar. No. It was over here. It was it over here? It might have been over here somewhere. It might have been one. I can't remember where it was. But anyway, it was like I was trying to take it back up, and it didn't get me. It left me. So then at the end of the day, once we was like selling off, because you see, we ain't do nothing. We went up, we sold down, we ran the liquidity, and then we just went sideways for the rest of the day. We're in the same range, right? Up until 2:45. Then we dropped down and, you know what I'm saying, did that deep dip into the liquidity and then start pushing back up. And I think we, you know what I'm saying, I think we gonna wait for Powell, and then depending on what Powell say, man, we probably gonna start trying to head back to that Sunday gap. I think we're gonna start trying to head back to that Sunday gap depending on what Powell said, right? Well, Tim, why you saying we're gonna head up to the Sunday gap if the market's just bleeding off? I'm glad you asked that question, little Timmy Rogers. I'm glad you asked that question. Let's look at Spilene real quick, and then we'll get into that right there. Right? Looking at Spilene, where you at? Look at how Spilene trading. Look at what Spilene doing, right? And look at Spilene on the weekly real quick so we can look farther left, right? Look at what Spilene did last week and this week. Boom. This is why I talk about me and the homie Zay have been, you know what I'm saying, having a lot of conversations about how we trading and what we doing, right? Right? Looking at everything that's going on. Everybody and their mama got let me see, ready. Look at this right here. Everybody and their mama, 95% on the CME group rate forecast meter or whatever they call this right here, trading rate probabilities for June 15, for 15 June 2022 Fed meeting, right? So what this mean right here, you see how 4.2% saying the rate gonna be anywhere from 125 to 150, meaning they're expecting Powell to go on with the 50% or the 25% rate hike, and then 95.8% says the rate gonna be 1.50 to 175. That means they know he gonna come in higher than the 0.5 and just do the 0.75. That's what this mean right here. This side mean he gonna do the 0.5, and this side mean we think he gonna do the 0.75. 95.8% of everybody thinking he gonna do the 0.75, right? And so that's why I believe all this bleeding off been happening, because the market is pricing in that 0.75, that higher than expected rate hike. Now, what me and the homie Zay have been talking about, you know what I'm saying? It's like Zay was talking about how he feel like, you know, this is gonna be a bad look for Powell, right? A lot of people feel like this. Even my financial advisor Dustin even said the same thing about, like, if Powell come out and do the 0.75, right, that's gonna make the the market or the investors or whatever you want to call it think that, hey, he losing control. Cause if he raised 0.75, that's gonna put us like just a quarter away from where we supposed to be by the end of the year. And if it's just a quarter away by the end of the year, that means they gonna have to keep doing more, which means they ain't got inflation under control. Pretty much. Not, you know what I'm saying, them just Tim Rogers words, but pretty much that, you know what I'm saying, like them having to jump to 0.75 now is going to give a lot of people the feeling of, you know what I'm saying, they lose control. They ain't got it under control. And then shout out to homie Zay, you know what I'm saying, he was like, now if he don't do the 0.75, they it's gonna be like he ain't doing enough. So either way, you know what I'm saying, they, you know what I'm saying, it's like old Powell in a bad position. You feel what I'm saying? Now, I'm from the school of thought of this all algo driven, right? Everything about the market is algo driven. Call me a conspiracy theorist or what, but since we done had all this selling down right here, all of this selling down is pricing in all the bad news, all the rate. When we got the higher than expected inflation numbers, the higher than expected job numbers, the market tanked. When we got the higher than expected CPI numbers, the market tanked, right? During that same time, when we was getting all them bad numbers, they started putting out on CNBC and all them other places, hey, the Fed gonna probably do 7.5. The Fed members start coming out saying, hey, we probably gonna do 7.75. I think sometime today, somebody, I can't remember who it was, somebody wrote an article about the stuff came in hotter than anticipated, like the inflation stuff came in hotter than the Feds anticipated, and they probably gonna have to do a 0.75. And shout out Dustin. Dustin was talking about it on his video today. He was talking about it on his YouTube video today about when they posted the thing about it's hotter than expected. Then everybody was like, whoa, wait a minute. Hotter than expected? That means he got some insider information. And so soon as they said hotter than expected, everybody they mama switched their sentiment from that's how come that point, that when I showed you that point, this right here, that point, that 9.5, cause I think yesterday, if I ain't mistaken, I think Dustin said yesterday this was like around 50% or so. But soon as the article came out about more than the inflation was hotter than they anticipated, everybody shift over to thinking that it was gonna be a 7.75, right? And then so that's the reason why I feel like once Powell come out and do his thing, you know what I'm saying, that's the reason why I'm thinking we gon', you know what I'm saying, get a little bit of an algo bounce, maybe some short covering, cause once we start getting the algo bounce, the shorts gonna start getting, you know what I'm saying, squeezed, or whatever the word is, you know what I'm saying, and then push it back up around 390 or so. You feel me? Go back up there around 390 or so. That'll put us right around that sun. Let's go to the day. Oh yeah, and also we also cleared these lows right over here. We cleared these lows right there from that swing low there, and that still got us within the range of this potential weekly order block right here. You know what I'm saying? Whereas before we came down and we respected it back then and went up, we done came down. Today, we cleared these lows right over here, these weekly lows here, and we still within that weekly order block right there, right? And if we go back to the daily, you can see how around 390 would put us right at that Sunday gap down from Friday to Monday. That Sunday gap down, that big, huge gap down right there, you know what I'm saying? That'll put us right there if we go ahead and get up a little relief rally and go up and finish off the week up there. And it won't, and like I was talking to Zay, it won't surprise me, because just like let me go back to the weekly. Let's go back to the weekly real quick. Just let y'all into the mind of Timmy Rogers when right here. This right here was the March quad witch time frame. That big green, that weekly candle right there. That was the March quad witch, where you see we came down, we got that wick, and we pushed back up. You know what I'm saying? We started the week off down. You know what I'm saying? Started it down and then finished the week off strong. Now, I'm not saying we gonna run that strong. That was we ended up. We made a 5% week up. We closed the week prior here. You know what I'm saying? I mean, we closed the week prior here, gapped up a little bit, came down, and then we got a 5.82% run up. I ain't saying we're going to do that strong, but I'm just saying we probably going to push back up to at least that Sunday gap before pushing back down. If we even push back down some more. But I think we coming back down here. You know what I'm saying? Me and Zay was talking about that. I'm thinking, I was saying 330, Zay was saying 320. You know what I'm saying? But I think we coming back down here before the pain is over. And then we what else I was gonna say? Oh yeah. And then like with all the recession talk, another reason why, you know what I'm saying, I think we getting ready for like a small bounce and then a push down, is because, for one, these weekly candles now, let's go to the daily candles, right? Daily candles, right? Everything, all the information, all the bad news, all that right there getting priced in. And then today, if you notice today, when we dropped the PPI numbers, the PPI numbers was pretty much in line. They were pretty much in line. They wasn't stellarly good. They wasn't bad. They was pretty much in line. Some of them was a little hot. Some of them was okay, kind of good. But it was pretty much in line. As soon as they dropped, we got a spike up. You see what I'm saying? The algos just don't like unexpected. You see what I'm saying? So with the stuff coming in line, the algos spiking up. So the algos looking, that's telling me, you ain't got to be on the same sheet of music with me, but that's telling me that the algos already got this stuff priced in, because when them PPI numbers drop, it spiked up. What happened when them job numbers drop? What happened when them inflation numbers drop? But now that all that's priced in and everybody expecting these higher, everything higher, when them PPI numbers drop, we spiked up and then we sold back down. You see what I'm saying? Spike, I think it was like a 12-point spike in 1 minute. We went up and then back down within like one. It spiked up because that's what they expected. You see what I'm saying? So tomorrow, long as they come out with what we expect, that should fuel us to go ahead and push up to at least this weekly closure right there at 390. That Sunday gap down, because we are super extended in the short term. Right? I'm gonna go from this high, this Wednesday high. This Wednesday high to today's low, right? From Wednesday high to today's low, I ain't got my snap on. From Wednesday high to today's low, that's pretty much 11%, 10.88%. From last week Wednesday to today's low, that's not even 5 trading days. That's 4, 1, 2, 3, 4. Well, that's 5. 5 trading days. 1 week. 1 week. We down 11% in 1 week. So we extremely extended to the bottom side in the short term, right? So long as the Fed come out and say be in line with what the algos expect, that should set us up to get us another see, cause here we go right here. Let me look at my calendar real quick. Right there. 14, 15, 16, 17, 18. Okay, so where March 14th at? 14, 15, 16, 17, 18. This is the March quad witch time frame right here. Right? We had a down Friday, a down Monday, right? Down Friday, down Monday, down Friday, down Monday. Then Tuesday, Wednesday, Thursday, and Friday, we took back off and cleared out that high right there. Right? That was during that quad witch time right there. Right? So here we go. We came over here. We had a down Friday, extremely gap down Monday. Tuesday was a nothing burger because we right in front of FOMC, right? And then tomorrow, if they come out in line with what everybody expect, that's setting us up to get a temporary relief rally from we down 11% in 1 week. You see what I'm saying? So it give us a temporary relief rally to at least up to 390 and then drop it like it's hot and start pushing down because everybody talking recession, right? Everybody talking recession, and recession, once we admit that we in a recession, the recession be over. Because if you look back, shout out my financial advisor Dustin. He done did a class on this a bunch of times in the dojo where he showed how once they acknowledge the recession, the majority of the down move is done. It's like I'm just gonna say pretty much 80% of the bleeding is over by the time they admit it's a recession. I shouldn't say admit, because the old school way of like a recession being official, it's like I think it's like two GDP periods, like 2 quarters of declining GDP. It was like something with the jobs, and then but it's like done a different way now. Let's go to what's name and let me give it to you textbook. Recession. How you spell recession? Is it a C or S? Session Investopedia. Where Investopedia at? Let's go. Where Investopedia at? Right there, boom. Investopedia. Right there. Significant decline in general economic activity. Blah, 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 blah. It's been typical recognized as 2 consecutive quarters of economic decline. That's the GDP. Like I say, that's the way it used to be done, but they done changed it now. Well, now these people right here, this National Bureau people, they define it as a significant decline in economic activity spread across the economy lasting more than a few months. Normally visible in real GDP, real income, employment, industrial. You know what I'm saying? So it ain't just based off of the 2 GDP quarters right now, but this just Tim Rogers saying it. They gonna keep doing it the same way. So now we done had GDP early, and then when we get the next GDP, like July, I think. But it's like, so this would be like this would be the second one. So if they acknowledge it in July that we in a recession, you know what I'm saying? It like just one more little pull down gonna get to where the market trying to get to. You feel me? So we pretty much, look at it, look at this fall. We going from here. We done went from here to here, right? This right here from January up until now. Boom. We done came down. Did I put the wrong line on there? I did. I need this line. Boom. Right there. So we at 22% right now from the January 4th high. You feel me? 22%, right? And then if we get down, we're going to go down to Z number. We're going to go down to Z number to 320. Let me type this in. We're going to go down to Z number to 320. We ain't going to go to mine. Mine a little bit more forgiving than Z's. 320. Boom. What that says, right? That's a 33%. Even if we went down and hit 320, we already done went down 22%. That's only 10 more percent. So it's still holding true as far as by the time they acknowledge the recession, 80% of the move is gone. You know what I'm saying? Let's get the calculator and see what that is. Right? Let's say 22, what was it? I'm just going to say 22 divided by 33. Right? That's 66, so just say 70% there already if it went all the way down to 320. So I had already said like 80% gone. Close enough for government work. You feel me? Because there ain't no guarantee where it's going to bottom out at. You know what I'm saying? Because my number was up here at 330 right there. That was my number right there at 330. You feel me? And that's 30%. That's only 8% away from where we at now. You feel me? So that's why I say I think we're going to see a temporary relief rally in the short term, at least up to 390, as long as the Fed come out and say, because that'll give us a little bounce, and that'll go right along with, y'all remember when we looked at this, what's the name right now? Y'all don't mind me. I'm just on my soapbox today. Y'all remember, and this all the stuff me and the homie Zay be talking about, man. If you ain't got no people around you that's pushing you to think about stuff like this right here, get you some more friends, right? And that'll keep us right in here in the area that both of us was talking about. You know what I'm saying? When we was on the phone, we was spot right here because Zay was like, I think we had anxiety. I was like, I think we had denial. And then we was like right in the middle of them because we was just sliding down. And yesterday on the close, we was like right here on denial. Now, peak now, it's following this thing to the T, because let's say today, we're a little bit lower today. So that put us here. And if you notice, it's a little relief there, and then it drop off. So if we just get that little relief and then drop off, it'll be following this chart to the T. You know what I'm saying? To the T. Now, everything, you know what I'm saying? And take everything with a grain of salt. Ain't no guarantees and none of this right here, but just based off of how the market tends to trade when extended so far like this right here. It's super extended in the short term. Long as FOMC come out in line with what the algos expect, you know what I'm saying? Excuse me, then I think we're going to see some people stepping in, you know what I'm saying, to do a little bit of relief rally, push back up to at least that Sunday gap down. It'll be sweet if they pushed all the way up to this gap right here by next week. You know what I'm saying? If you know what I'm saying, between this week and next week, if we can get back up to 400, oh, that'd be gravy to push back down. But I think we're going to at least get up here to 390, you know what I'm saying, before dropping it down. But back up here to this one here would be lovely. Like, and then dig what that'll do. That would clear out. Let's go over here. Let me see something real quick. I don't really even look at the VIX, but if we went all the way up there and cleared out both of them gaps, you know what I'm saying, that'll bring the VIX like right back down to this little area right here to get that what the homie Zay be calling them little nuggets. What do you call it? Little treats. What Zay be calling them? The little hidden treats. If we go up there and get both of those gaps, we'll get this gap here, and we'll get the little, what Zay call it, the little hidden nugget on the VIX. And I don't look at the VIX. I just happen to pop that open just now, just on GP. You know what I'm saying? And that, but everything is like lining up, man. That's what Boogie, shout out Boogie, always coming in with the super chat, man. Never ever fight the Fed. If he isn't printing money, he is your enemy till he stops. I'm glad you said that. Let's talk about it. Hey, that's all I got on the price action. I'm gonna put the link in the chat. If anybody want to pull up and share something, if anybody want to pull up and talk about it, if anybody want to pull up and say, Tim, you's a got fool. Y'all pull up, man. Pull up. I ain't never scared. Why my thing ain't printing? Am I froze? Can y'all see me? Can y'all see me? It said it's having a problem connecting. Can y'all see me? Can y'all see anything? Everything? Can y'all see that chat? Somebody put a 1 in the chat if y'all can see me, because it says somebody's having a problem. Okay, appreciate it. I got the link in the chat. If anybody want to pull up and share anything, if anybody want to pull up and mention something, if anybody got a question, pull up, hit the link, you know what I'm saying? Come up, let's talk about it. But Boogie, back to Boogie super chat. That's 100%. Never fight the Fed. Never fight the Fed. If they ain't printing money, you know what I'm saying, he your enemy. And during this time, that has been the case. And why has that been the case? Because they've been trimming fat. They've been trimming fat off of everybody. You know what I'm saying? The fat has been getting trimmed. You got people who need to be able to borrow that money cheap in order to grow their companies. You see what I'm saying? But we have been trimming the fat. We have been getting rid of those overinflated evaluations. We have been doing all that stuff for all this right here. This 22%, this 22% that we did, that's what we've been. I'm on the wrong one. I'm on the wrong high. Boom. This 22% we did right here, that's what we've been doing all year. We've been trimming the fat. We've been preparing all year. All year, the people. Oh, the homie Zayden pulled up. Let me stop running my mouth. What's good in the hood?
What's up, bro?
What's up with you, man? Pull up. Give me the smoke. Zay got that look like he fun to bring the smoke. Come on, give me the smoke.
Look, in the chat, bro, we was like, man, look, Tim, this relief rally, bro, we talked about it. You just said it. I don't think we're going to see it just yet, bro. So, all right. A couple things that we done talked about, and that has already happened. So, we hit 5% down for the week today, officially. So, I told you, or we talked about it. I was like, they're going to try to sell us down 5% minimum. That was my minimum number. Now, as I look at it, and if you pull up the chart just so that people can follow along with us.
All right. Let me.
And pull up Spylean for us. Spylean.
Let me put you on the other screen. My OCD be acting up. I don't like when I be looking like I'm looking away from you.
No, I got two screens, so I'm looking to my left because that's where we at, but my camera in front of me.
Yeah.
All right, so go to that monthly for me first.
The monthly?
Yeah, the monthly candle.
Now you looking around. That's gonna mess with me. Hold on, man.
Look, look, just change that D to an M.
No, I'm just saying I got to do this right here, cause that's gonna mess with my mind. Hold on. That's gonna mess. They be like, Tim, why you like that? I don't know why I'm like that, man. I don't know why I'm like that.
Tim look like you ready on his parade.
What?
Somebody said in the comments, I look like I raided on your parade.
Okay.
I
share the wrong screen.
No, I see you, Spy.
No. I'm trying to. Oh, you look. Oh, yeah, you looking that way, so it don't matter what screen I share. It's still gonna be looking the other way. All right. All right, go ahead.
All right, put it on the monthly for me. So just a couple things to point out, and this is what we was talking about, but we'll just share it with the people. So all right, so if you just look at that, just hover the cursor over the June candle.
You say June?
Yeah, this current June.
Okay.
So our current monthly candle, not 21.
Oh, okay.
So we down 9.46 for the month.
9.46.
Yep. All right, so go ahead and book it and say we go down 10%, right? So if they get us down 10% for the month of June, that puts us at like 3,700, but basically.
Oh, let me see. Let me push that. I'm just gonna stick another percent on there. Get up, man. I be having when I have my snap on.
You got the snap thing on. You gotta hit that,
Yeah.
So yeah, that's only about another 0.5% from where we at right now. So like another half is basically like 369, 370, something like that. Right?
Yeah, pretty much. Close enough for government work, yeah.
Now, so all right, so of course they ain't gonna just pull us down 10% perfect like that. So go ahead and just say they go run some stops a little bit. So then we're gonna hit a low of maybe 12 to 13% on June. What would that bring us?
All right, so
we
had 9.4.
So additional do like additional 3% from here.
Yeah. So boom, that's close enough for government work. Come on, Tim. Like I'm putting another 3% down. That's good right there.
What that put us at?
That put us at 3. I got so many things over there. Like 360.
All right, so I think what they gonna do, or or how I kind of see it, and just think about how these type of reversals and stuff like that have played out. Today, we made a new low and we wicked up. So most people will say, hey, we have buying and selling at that low. So it looked like there's some buyers down there. Now, typically before you get a full reversal, you do go revisit that low of that you make. But if you go back and like study full reversals, what they'll do is they'll break that low and just keep selling it down hard. And you'll close at that low looking like, oh my God, it's game over. But typically what then will happen is you'll then gap up that next day or whatever. So my thoughts would be, and this is what we talk about. So I feel like regardless, Powell is screwed. He do point 0.5. They say, basically he not taking inflation serious enough, or the inflation narrative has gotten out of control. Well, really, here's the thing. I don't think it's so much the raise, is what he says about what's to come after. Like what's going to happen in July and September. So if he sticks with the point 0.5, okay, it's 0.75 on the table for July or September. Uh, if you do point 0.5, are you still sticking to the full script of point 0.5, point 0.5, point 0.5? He goes that route. You got the other route of he comes out and surprises the market and does 0.75. Well, you do 0.75. What does that mean for July? Is it still a 0.5? What's that mean for September? We don't know. What if he comes out and does a full point and he says, hey, you know what? I'm gonna move up July and do June, and we're gonna do a whole point. Well, okay, if you move that up, are you still gonna raise rates in July, or what does July look like? And once again, what does that mean for September? So it's just
Mm-hmm.
a lot of scenarios that, yeah, the big banks and all of that, they publishing in the news that, hey, we pricing in 0.75, but they asking the same questions we asking ourselves. It's not so much, okay, he does it now, cool, he does it now, but we been knew rates was going to go up. It's
Mm-hmm.
what I personally believe is it's about what is that final target he's trying to get to. And if you really look into it, his final target he has to get to has to at least match or be above the US 10-year. Today, the US 10-year got to 3.4.
Mm-hmm.
So he already came out and said, look, we won't hesitate to go above neutral if we have to.
Yep.
So from this point forward, we really, really need for the US 10-year to stop going up and actually reverse and go back down to about 3, maybe even 2.75. Because here's the caveat. If that thing keep going up, and let's just first of all at 3%, and this was the last thing that I would say. Here's how, for people who say what's priced in and what's not priced in. This is how I'm considering what's priced in. For every 1% of Fed funds rate that he goes up, that's 10% on equities. At this point in time, the US 10-year is at 3.45. If I take the assumption he has to at least get to 3%, that means we need to be down 30% for all his rate hikes to be baked in.
Mm-hmm.
Period.
Yep.
So until we get down 30%, all them rate hikes ain't based in. Now here's the scary part. If that 10-year keeps going and he has to go above, or let's just say it maintains this 3.5, 3.25 level, that means he got to go to possibly a 3.5 to 4% Fed fund rate. That's
Mm-hmm.
40% on equities for all of that to be priced in. Now that may happen from now into 23. I think that's when they finally say, hey, we're in a recession. And at that point, they'll say, hey, the market is down 40% from its all-time highs. And I think 40% brings it to like 2,900 or like 3,000, which is nasty work. Um, but that's kind of like how I'm looking at this whole situation with the 10-year if we're going into a recession, because now when you talk about those numbers, that's basically all pricing in a recession. Whenever you hear any of these old big time investors, they'll basically tell you, hey, when we get to 3,300, 3,200, that's fair value. That's basically where we was at the 2020 high, blah,
Mm-hmm.
blah, 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 blah. All those numbers, they just intertwine. So it all kind of works out. And so just for those who kind of wondering, like that's how I'm looking at. So ultimately, the final thing is that if Dan Niles, he a bear, been a big bear, and he been spot on. What he said was he thought that we would get a 5% bounce when we got that bounce going into Memorial Day, and then he said the next 10 to 15% would be to the downside. So when you take 10 to 15% from the 4170 where we broke down, it gives you a range of like currently where we're at to about the 35.50. I think we talked about, Tim. And then when you do so if you do the 10, so if
You
you go
say
to
coming from where we started breaking down at now this time right here.
no, go to a weekly. I can show you better. All right, so the green candle that we got was the 5% up week that he thought we had.
Okay, yeah.
Here from there, he said we probably get 10. The next 10 to 15% will be to the downside from there. So if you measure from where we closed that green candle to where we are now, how much downside is that? 10.
That's 10.
Okay, so we hit his 10. So now we can go a little bit deeper and go about what's 15 put us at?
It probably been easy to drag it.
Yeah, I was gonna say just drag it.
Yeah, it might be easy to drag it. 15 is 35.30.
Yeah, so I was saying that 35.50 number. So now leave that there, right? Now check me out. Do a like a 9 to 10% bounce from that 35.33 number.
Say 10% from there.
Yep.
That's back to the weekly gap.
That's where you're gonna get your gap, bro. That's your relief.
I like your roundabout way to do the doom and gloom.
That's your relief, right?
I like the roundabout way you gonna hit me with the sucker punch. Get off my live. No.
Now do a 10% bounce from the 10% where we at right now. Let's say we don't go down the full 5. Let's say we do it.
Say 10% from where we at now, just go up.
Yeah. Yep. I got
the wrong line. Hold on, I hit the wrong line. I got to get the. Hey, what's that little square you be using, man?
The little rectangle?
Yeah. With the numbers, like yours be having numbers in it.
Oh no! Wait. What you mean?
Like when you be getting like the 10%, that's like 41.12.
Oh,
like
no. I got you. Okay, I got you.
Yeah, like you be grabbing a little box and doing, it be having numbers in there.
So use that little measuring stick.
Measuring stick.
So
this right here?
Yeah, that. Yep.
What in the world? Oh, that right there. Okay.
Yeah, take off the magnet though, because the little magnet.
All right. Yeah, all right. I just ain't know what it was. That's why I was asking.
Yeah, so that's right there. So what was the 10% bounce from where we at?
Like pretty much 41.10. It's like 41.12, like 41.10.
Back to it goes back up to like kind of into your fair value gap from where we like started to that one nasty drop.
Talking about right around here?
Yeah, like somewhere up in that area.
Yeah, right around there. Like, cause this the weekly, so I can't really see where the gap's at. But this was, well,
I'm saying right over here that candle, that small weekly candle.
Cause this was the consolidation. That's at the top of the consolidation right there when we drop down. Where I got it now.
So those are your two scenarios right there. We hold, we're here, and then possibly we can get a nice little 10% bounce, and that takes us to that 41 whatever. Or the scenario I like a little bit better is we continue to flush down a little bit more and really get that panic going.
We gonna get there. We gonna get here. But like I like the way you did the doom and gloom just to hit me with the sucker punch. But just based off of like the extension of it and based off of everybody, it's like in the short term. I ain't talking about like far out. Like I feel you, and I feel like Dustin and everybody else who gonna be like, okay, when they start changing the size of the hikes, they gonna be like, oh, y'all out of control, and yeah, that can be a bad look for them. You see what I'm saying? But I think like for the short term, it like the 7.5 is priced in. The higher than expected inflation has been digested. You know what I'm saying? And the reason why I say it's been digested because when the job numbers came out, the Algos tanked it. When the CPI came out, the Algos tanked it. But when the PPI came out, the Algos spiked. You see what I'm saying?
I do. But again, what I'm gonna say is it's close to all the way being priced in. When we hit 25, here's a good way to do it. Let's just say we hit 25% down on the year. That's going to price in about 2.5% of Fed rate hikes, a little bit under 3. That will price in your 0.75. Now, let's say if we get a 25% down and then we bounce 10%, you know what I'm saying, from there. So what's 25% down on the year?
25 on the year would be 36.15.
There you say. So that's what. So again, I think we got a little bit more downside, and then we get that bounce again. Now you can take a 10% bounce from that 36 whatever, and that's going to probably bring you right back to your 3,900 gap. That's that Sunday gap.
I ain't saying we fun to take off, but just how extended the mark. Like this is like this not even.
Okay, let's do one more thing. Remember
this not even.
Remember when we did the average drawdowns and they was like 14, 17, 12, all those numbers?
Yeah.
All right, so you just did this and we only at like 11 over the past 5 days.
11 in 5 days.
So you might as well give us the 14 in 6 days.
11 in 5. That's what I'm saying. 11 in 5 days. Like if it was 11% over 2 weeks, I'd be like, yeah, we probably still gonna slide some, cause it would just be like a trickle down. You know what I'm saying?
Yeah.
But when it fall off the cliff like that, it'll be. And even just think about it like this right here. Think about it like this right here. From like everybody that look at stuff and like as far as investing, dealing with like EMAs and all that. Everybody, they mama like we 2 standard deviations away from the 50 period. You know what I'm saying? Bye. You feel me? It's like I ain't saying we finna go to the moon, but I just think in the short term, the way the Algo's been acting based off of all the bad news, that's why we got this straight. We got a vertical waterfall drop.
But look, change it to a line chart. All of it look like straight waterfalls for real. If you go, honestly, if you change it to a weekly, we ain't been doing nothing but waterfall falls.
Exactly. But you go
right there is crucial. I get that. But I mean, look at the one we had back in like January. That thing went straight down too.
Nah, this one ain't. No, come on. This was like.
If you measure from that top.
No, I ain't talking about measuring. I'm talking about the small reliefs. That's what I'm saying. I'm talking about like from here we came down, got a relief. Came down, little bump, came down, little bump, came down. You see what I'm saying?
No bumps ain't no relief. That ain't nothing.
This just blip. You see what I'm saying?
That's basically the same thing.
This just look at that. You ain't got nail. You ain't got nothing. You ain't got no day where it closed sideways. You ain't got no day. It just fell out a window. You feel me?
But that just means them cats that had, you see that 390 close, bruh, they was letting everything go up there at that 417 because they moved all they stops because we just, like you said, we just fell off a cliff.
Yep, we fell off a cliff. And
so I gotta just say, I think that cliff got a little bit more way to go before we finally, turn ourselves around a little bit. Again, and my thing is this. I feel you with we should get some relief soon. I just don't think we see the relief until after Friday. I think because everybody's going to be so pressed to try to get that relief rally that they might just hold the market down. They don't got to keep selling it down, but they can keep it pent. And then, because it is quad witching and all them contracts going to be expiring and all that, they can just go ahead and keep the market pent. And then ultimately, the following week, those like, and if people really look at the charts, most of the rallies we've been getting have been towards the end of the month anyway, which if you go look at the monthly candles, most of the monthly candles got wicks because towards the end of the month, going into like the beginning of the month, we start to rally just because, they try and stay faced by the end of the month.
2:00, 2:30 tomorrow gonna tell the
tale. can't wait. I can't wait. I can't wait. I will tell this. Everybody, have your list ready because that volatility will be crazy. And I just know that I'm gonna be buying something tomorrow.
Hey, look here. He said only person buying at Tim is Warren Buffett. Now, see, this what I be trying to tell people, man. This what I be trying to tell people. It's not the fact of Zay stuck in his bias, I'm stuck in my bias. It's just a healthy conversation about the market. Yep. You know what I'm saying? It's like I totally get everything Zay's saying. Zay totally get everything I'm saying. It's like we looking at getting to the same place. We just looking at getting.
We just trying different routes, like the way how the market can do a couple ways, man. And here's the funny thing: in order to get to that place, we both like, all right, if it do it, okay, if it do a 10-way and we don't go down to the 3 whatevers, when we get to 10,900, oh, I'm for sure short in there because we coming back down. Right?
Yes, sir.
Now, if we can flush, I actually feel a lot better about if we flush down to that 30, 36, 35, that you can buy there and actually ride, we might actually have a good summer. Like that would satisfy a lot of those downside gaps. And then the month of July could be pretty decent. Now, I ain't saying, again, it would be something crazy, but, July could be okay. Now, again, August and, September probably go back to being rocky. But, if we go and flush down in 35 levels, I think July could mess around and be could be an okay month. That could be a relief month.
Now,
like where we just rally crazy that month.
This right here. The only reason why I ain't like 100%. I'll say the only reason why I ain't 51% on board with your way of it happening, of getting there, is because, right, let's just think about remember like Boogie would talk about little Timmy Rogers eating up all his lunch money, right? Yeah. Let's think about how the market operates. Like, I'm a algo conspiracies, right?
Okay.
So here we go. We done came from here and we done came down there, right? So for like all of the algo conspiracies, hold on for a second. What's up, baby? I'm on live. What's up? I'm on live, baby. Hey, you on live? Yes. Okay, bye. All right. Yeah, that made my IG go crazy. Ain't nobody on IG anyway. But dig it, right? The only reason why is like think about how the algos work, right? Mm-hmm. The algos hunt liquidity. We all know that. They hunt liquidity to make their moves, right? And using the scenario of little Timmy Rogers eating up all his lunch money, right? So we're gonna leave it on the line chart for right now, right? Mm-hmm. The major liquidity for the algos right now rest above this right here. Jesus Christ, everybody calling me. Auntie, I'm on live. What's up? I was just calling to say I'm coming to get tested tomorrow. Okay. Tomorrow evening. Okay, I'll make sure you got all this stuff ready. All right. Love you too. Mm-hmm. Yeah. So the major liquidity right now is resting up here because we done sold off these. You know what I'm saying? These are the last highs. You see what I'm saying? Yeah. These are the last highs. So if we keep going down, what we said the other five, we said what, 5 more percent?
Like maybe
because we down 10, 11? We down 11%.
Now we down about 9, so we saying we go to about 12% down. So do about 3.
Go 3%. Okay. Boom. We go 3% down, right? We go 3% down right there. That puts us here. And then to get back up to right there, to get back up to the 390, right?
Yep, it's gonna be about a 6-7% bounce.
get back up to the 390 right there. You see what I'm saying? So now that's where we're going to come here and we're going to bounce back to there.
Yeah.
Now that we done dropped this far, right? Now that we done dropped this far, now the algos are, we dropping all the way down here, right? And like all these people, all this selling going on, soaking up all this downside liquidity, right? We gonna bounce back up just to go here for the liquidity delivery to go back down.
No. So that's why I'm saying, if we go down, like you saying right there, I think that yes, the first bounce will probably be, that little 7-8%. Then we can maybe pull back, say 1% or 2 just to consolidate. No, it ain't gonna be that far. But maybe like another percent, and then we'll have another leg up to get to the 4180. Like, put it this way. Ultimately, we didn't have enough sauce to get to the 4300 delivery when we hit the 380 low. So that means we needed to go down to get some more, because I do think we will get back to 40. Like, ultimately, we're trying to get to that 4300.
Don't be changing your story on me, Zay.
No, that's what I'm saying. I'd much rather us go down to this the 36. From 36, we'll get about a 10% bounce, which should take you to about the 32. 10% should get us right there. Yep, right there, about 4,000. And then from there, we'll just have to, we'll have to see what the narrative looks like, right? Because I do think from there, that could kind of put in a bottom. Like you already kind of made that point. So what you would then see is if we do get to 4,000, you might have one more test of say maybe 3,900 or something like that. But then from 3,900, we'll bounce up to the 43. Like that will be that change of trend that we finally been looking for to kind of to hopefully swing back up. Now I ain't saying swing all the way back up, but this is what I'm saying. It creates for a really good July we go down some more. Then we, by the end of June, we are able to push back to that 3,900 and close June at 3,900. And then what that does is that allows us to have a little bit of a pullback early July. And then going into July quad, which in middle of July, we can get another leg up to that 4,300. That sets us up pretty good. And then ultimately, going into August and September, we possibly could come down and maybe test 4,000 one more time just to make sure like we locked in and that's it. Or it's what I'm saying, more recession talk, and it's gonna be a lot worse.
Okay, you with your 2% extra. I think you changed something in the story just then, but this my last thing. Well, how long we been on here? Oh, we've been on here out. But this my last thing. This my last thing before I let the Spider Gang go. The video that you sent me to have me look at, right? The video you sent me to have me look at, right?
You said the Wick Foreman.
Right? The Wick Foreman. The video you sent me, and like with both of us, we already talked about this right here, right?
I know.
We already talked about this. We were talking about having a weekly candle, like with the wick, like this right here, right? Yeah. We both already talked about that. We both agreed on we gonna have that. We think we gonna probably have a weekly candle.
Right, you're right. I did say that, right? But man.
Okay, so now going back to the video you told me to watch, right? when I told you Buddy broke it down using the options.
He did.
Right? He broke it down using the options, and for the SPX and the SPY options, he was saying the way they got them spreads set up, they needed to be around between 3,900 and 3,800. They needed to be in that area right there to get their money or get more. Right.
That's
so like, if we end the week,
we call that max pain.
Yeah, if we end the week, like I said, the Fed do what they supposed to do, and we end the week right there at the gap, right at the gap. That's right there between that 3,900 and 3,800 and that 390 and 380 on the SPY. You see what I'm saying?
Hey, look, I hope
all of that line up. That's his theory.
I hope we get it. I hope we get the relief rally, man.
Hey, Check this out. Check this out. Check this out. Since we on the live right now, right?
I say, what was the video?
Since we on the live, this what we gonna do right here. This what we gonna do right here. Since we on the live right now, if we in the week, right? If we in the week going back up toward that fair value gap, like trying to get back to that fair value gap, either like going to the 390 fair value gap, right? Well, no, I put it like this: if we don't get the rally back to the gap this week, right? Because you said we ain't gonna get the rally to the gap to next week, right? Or later.
Yeah.
If we don't get the rally back to the gap this week, you know what I'm saying? I got you and your wife the shirt of your choice out of the store.
Okay.
Right? If we don't get the rally this at the end of the week,
Friday. Basically by
Friday. If we don't get the rally going back to the gap, you know what I'm saying? Now I ain't saying we gotta totally feel it, but I'm saying we gonna get a relief based off of what the Fed say. We gonna get a little relief bounce because we extend it and we gonna start going back up, right? Boom. If we don't get that, you and your wife got the shirt of choice for both of y'all. I ain't got none for the kid size, but you and your wife got a shirt of choice out the store, right? Now, so if we get the rally.
Okay, we get the rally.
If we get the rally, now it's on you. What I get?
I mean, what you want? how we make it even? Because I'm like this. I don't really have a bias. I mean,
Olive Garden gift card.
Okay, we can do that. We can make that happen. We can make that.
I just turned my camera off.
Hold on.
I turned my camera off.
Either way, and I'll say this: I'm okay with losing. I guess if we call this a bet.
She said, she in the chat. She said dinner.
All right. So look, I don't, if I'm fine, if I lose this bet, because how I see it is, hey, a rally is good for everybody,
Yeah, rally good for everybody.
Rally good for everybody. But we'll see what Powell do.
Yeah, man. But in all, like I said, in all seriousness, man, Zay, my dude, Zay, it's like he pushed me to think about every aspect of it. Aspect of it. It's like just over the last couple of days of talking with you, my guy, it's like I've been looking at different like aspects of like the economic side of it that I ain't never really looked at before. You know what I'm saying? Like I pay attention to it, but I ain't never deep dive like looking at all the stuff that you was sending me.
The little articles, the
little articles and stuff going back to 2018, and I ain't never deep dive. I ain't, I was you had me on some Ian Dunlap. Go research the last 7 cycles of recessions. And shout out Ian. He a smart dude, man. Everybody know, the energy shift is what made me stop following. But that man know his stuff now. He know his stuff. You know what I'm saying? But it's like, I appreciate you. And if y'all ain't got people in y'all circle like this, man, this is important when it comes to this investing, man. You need people that's going to challenge your thesis. You need, matter of fact, when you go to school to be get your PhD, that's why they say you have to defend your thesis. People gonna come in and try to rip your thesis apart, and you got to be able to defend it. You know what I'm saying? And it's like, you don't defend it in the sense of, we enemies. You defend it to know that I'm standing on something firm. This is a firm foundation. I have researched it and I have put in the work, and ain't nothing 100% guaranteed, but you have put in the work and you're making educated decisions. You ain't just buying something cause Zay said so. You ain't just selling something cause Tim said so. You ain't just getting leaps cause Mark said so. You ain't buying this biotech company called Cathy Wood said somebody on the news. You know what I'm saying? It's like, get people around you like this man right here that's gonna force you to look at both sides of the story. Shout out Mark Monroe talking about know the bear in the bull case. You know what I'm saying? Shout out anybody that force you to just think outside the box. Because if you go into anything one-sided, oh man, you severely handicapped.
Yeah, I was about to say you can get blown out, boy.
Yeah, severely handicapped. I appreciate you, Zay, man.
No doubt, brother. No doubt, man.
I appreciate y'all for tuning. We've been on here a long time.
I'm definitely coming back tomorrow because we're gonna have a lot to talk about.
Pull up,
boy.
Pull up. Pull either I'm gonna pull up. Either way gonna pull up talking trash.
I know, right? Either way, it's gonna be a good one, man. So I can't wait, man. I'm ready. Oh, just so everybody that's watching, just so they know. Not only do we got the Fed and all that, did you let them know retail sales is tomorrow morning?
Oh yeah, retail. I put the calendar. Let me put the calendar up real quick.
You got the Fed manufacturing at like 10 o'clock. Yeah, tomorrow is a lot.
Yeah, we got retail sales at 8. You got manufacturing index. Yeah. Like all this stuff, these like green, but this still be important stuff. It's just not what they call market movers. You know what I'm saying? All this stuff is important. The red stuff is just the stuff that can create volatility in the market. But all this other stuff that don't nobody really be looking at, you know what I'm saying? Like as far as trading, this the kind of stuff that be affecting them PPI numbers. You know what I'm saying? This is important stuff. So when y'all go in there, man, go to these sites and dig. This is free, man. Go in there. You can go to Econo Day, you go to Forex Factory, and if you click on what the thing is, it takes you to the page, and then you can see what the information is. See definition. It tell you what it is. You see what I'm saying? And on Forex Factory, they got a little spot that says why investors care. You know what I'm saying? It lets you know why people care about what that is. Man, y'all go out there and use these resources, man. Go use them, man.
Big time, big time. But all right, my good brother, I will holler at you tomorrow, man. To the good people that be tuned in, Spotty Gang. Appreciate y'all. I'm going to holler at y'all tomorrow, man.
Oh, yeah, your wife back there, she said, get off the computer.
Yeah, and dinner here.
All right, bro. All right, y'all, man. I'm gone, man. Yep.